For a deeper dive in terms of the dollar and the currency movement that we've been seeing, I want to welcome in our next guest today, traders. We've got Bob Iaccino, the founder and chief strategist at Path Trading Partners, with us here today on Futures with Lichtenstein and Hinks. Bob, welcome to the show. Great to have you back. Usually, with big swings in the ES, we see dollar reacting. Not so much so over the last week. It seems like still that 91 to 88 area. Why such a limited reaction to the movement we've been seeing in the ES, the NASDAQ, the Dow, the Russell? Why is the dollar just kind of parked?
Well, I think the movements you've seen in the equities, Ben, and thanks for having me again, is really not structural. It's not a sort of a change in the fundamental story. It's possibly a change in the business model of certain FANG stocks and tech stocks that drove the market higher, but it's not a change in the underlying fundamentals as much as the dollar can correlate almost one-to-one with the equity markets. There is a bigger picture and there are more inputs than that. The dollar really is relatable to cross currents and interest rates. There's nothing that's been going on in the equity markets that is necessarily going to change the direction of the Fed. A little bit longer term you see it as we saw the 10-year note break 280 yesterday. But in this sort of short to medium term, the dollar isn't necessarily going to move as if these moves in the tech stocks are going to affect what central banks are going to be doing. There's got to be a change in that tone, and then you add in the sort of tacit soft dollar policy that the White House has, and that's not really changing because of what's going on in tech and what's going on in general. The narrative switched in the ES from trade wars and trade tariffs to kind of the weight of the technology leaders kind of lightening up.
Good morning, Bob. Another sell-off a day or two ago in the US dollar, got it down to 88.53, but another rally, another recovery from those levels. Now, was that another buying opportunity and a chance to cover shorts, or is this the opportunity that we're seeing here? Remember, a lot of our guests have been bearish the US dollar, but it still seems to keep fighting off these low levels. What are you seeing in terms of a long-term picture for this US dollar trade?
Yeah, hi, Kevin. So last time I was on where we were talking specifically about currencies,
yes,
I told you guys that I wanted to be short-term long the dollar, and then if I got to my targets on those long trades, that I would reverse and go short the dollar because I too am bearish the dollar longer term. I got stopped out of those long trades, so I'm not interested in necessarily buying that. What we're seeing really is the dollar being very sort of, what's the word, loyal to the 3 to 4 moving averages that I look at and continuing to bump up again against those particular levels in its sort of medium to longer term downtrend. Now, I do believe Larry Kudlow will have some sort of effect at some point. He hasn't really gotten into the teeth of the job, but we got a very first trade victory for President Trump. Whether you like his policies or not, a very, very small trade victory with South Korea,
yes,
where South Korea is going to allow 50% more U.S. vehicles to be sold without passing local regulations in terms of safety and air quality pollution standards. So that's a small victory right there. You continue to get those victories and the dollar will break out of this. But what the dollar is in right now is a sideways trend with a small bearish bend to it, and the rallies continue to get sold. That's what stopped me out of those long trades. But you know, my heart wants me to get into a long trade, but I can't do that until price action allows me to do it.
Yeah, well, we'll look for a breakout or some indication that it's starting to firm up. Bob, stick around because coming up, we're going to take a look at the euro currency and the other major global currencies moving around right here on Futures with Lichtenstein and Hinks after this short break. Welcome back, traders, and I'd like to welcome back our guests this morning. We have Bob Iaccino, the founder and chief strategist at Path Trading Partners. Bob, thanks for sticking with us through the break. We got your new GDP numbers just released about 2.5 minutes ago. Looks like GDP came in a bit hot, but if you take a look here, it looks like that real consumer spending came in a bit lower than consensus here. Real consumer spending, traders, came in at 3.4% this morning. They were looking for 3.8%. And then we had GDP 2.9%. They were looking for 2.5%. Looks like the GDP price index month to month came in line with expectations at 2.3%. Bob, I'm still seeing the NASDAQ in negative territory, but the ES, the Dow, the Russell holding on to positive territory inside the range from yesterday. What are your thoughts on this number this morning?
Yeah, I think overall it's a wash. This is a revision of the old number, so it's a little bit dated in terms of its validity. It's probably more political that it came out and beat. You know, in terms of the NASDAQ, it might help, this kind of a number might help the markets be able to sort of quarantine Facebook, Twitter, Snap, Google, and kind of let the rest of the market run sort of loose from the problems that those particular stocks are having. But you still have a situation where, according to Bank of America Merrill Lynch a couple of weeks ago, 38% were overweight tech, and that was the largest overweight position. Interesting, referring back to our conversation before the break, the second most overweight position was long the dollar. I'm sorry, short the dollar, with 17% of the people reporting as being overweight, short the dollar. So you combine those things, and a lot of this is washing that out, getting it more into balance. Ben, I know you like to talk about balance in terms of market profile and charts, so this is the same thing. Getting those positions sort of into balance is what these washout mean. Now, the PCE part of it's important that that stayed flat, because that would be what would affect the currencies, and we saw the dollar strengthen a tiny bit after this number, but nothing dramatic, but especially against the euro.
Good morning, Bob. Again, just so you know, 2.9 on the GDP. They were looking for 2.7. You know, the last revision, the second revision was 2.5%. Is this a number that's going to kind of halt this bond rally that we've been talking about? It appears to me on the surface like this should weaken bonds. What is there another reason besides this number to stay long bonds here if you're trading them from the long side?
Yeah, I think the movers for the market right now are more short term. Again, this is Q4 revision. It's the final. So it does show things as being stronger, but really we're going to move, especially medium-term bonds, the 5 and 10-year sector, are going to move a lot more on some of the tensions we see, from tariffs to China and North Korea, to Russia to a certain degree. China and North Korea, the positive side of that has kind of overshadowed the expulsion of the diplomats with Russia and what that retaliation might be. That could actually affect crude oil prices down the road if it were to get serious. But having said that, I think we're going to be looking at much more short-term data. You know, we saw some pretty weak consumer confidence, both in the EU and in the US. We saw Jens Wiedmann from the Deutsche Bank, from the Bundesbank, who's the chairman of the Bundesbank, essentially the second in command of the ECB from my view, because it is Germany after all, talk about being able to remove QE with inflation dipping. He said that's definitely a possibility, and he has the loudest voice, and the ECB is listening when he's talking. So you could see a little bit more euro strength there, in which we could see some more dollar weakness, and that might be a potential reason to hang on to bonds a little bit.
Bob, let's talk a little bit about that international trade number that came also released at 7:30. That number came in down 75.3 billion. Now, they were looking for down 74.0 billion, prior down 74.4 billion. Bob, I'm curious, with all the discussion here related to trade and trade tariffs, how much do you think traders are going to be dialed in on this number here today?
I think this is the kind of number, Ben, and you guys would both know this, you and Kevin would both know this from trading, was not something that we really paid attention to in terms of short-term trading, because it didn't really move things. However, I think we're going to learn to, just like about 5-6 years ago, we started to learn to become crude oil forecasters, and before that, when we saw the ags moving, we started to become weather forecasters in terms of hurricanes for crude and everything else for ags. It's funny because the trade's good is the focus of this particular White House. And when you add in this small South Korea victory, and then you add in the slight shrinking of that trade balance, you'll probably see the White House start talking up this number as it gets more and more, as it shrinks more and more, which it probably will. You leave everything else equal, and a weaker dollar does that. So all else equal, a weaker dollar could take away the difference that we saw from the expectation and the actual number today. So again, all of it tying in, but it's a complicated issue. Traders might have to start looking at this number. I don't think it's going to move anything today, but keep an eye on that one as to be a much more high-level importance number down the road.
Hey, Bob, once you become a weatherman, you stay a weatherman. I know you can't turn off the weatherman in me. But anyway, let's talk about the euro here. It looks like another soft day for the euro in terms of its relationship with the US dollar. Is this trade right now, as it, we heard a little bit of news out of the Eurozone this week, not really much this morning. Is this all about the US dollar trading causing a soft euro, or is there anything that we should be looking at in terms of news coming out of the Eurozone?
I think it's interesting. I go back to the comment that Mario Draghi made about a month and a half, 2 months ago, just after Davos, where he said that the ECB is going to have to review their policy if the US is reviewing theirs. Now, I'm paraphrasing, right? But essentially what he was saying was, if the US is going to decide to have a policy of a weaker dollar, then they're going to have a policy of a weaker euro. That's what I read when I read behind the lines on that one. Mario Draghi is soft, and I don't mean that as a negative. I just mean he wants the euro repressed against the dollar. So the dollar has to rally actually for the euro to accelerate past the dollar. It's almost like when two trucks are driving, you get that sort of draft. Or if you watch NASCAR, you get that draft and that sort of whiplash. If you don't watch NASCAR, you can get it off Talladega Nights. It was the same effect. So that sort of slingshot effect. That's what's going to happen. That's what's going to have with the euro. Strange as it sounds, you're going to have to see dollar index strength, in my opinion, for the euro to snap past the dollar and get up into that 126, 127 area where it probably should be based on economic growth.
You know, Bob, I want to talk a little bit about the yen because we've seen quite the bid come into play. New 2018 highs recently. We've been watching this very closely, but you have to go back to November 2016, again, to see the levels that we're trading right now. Is this just flight to quality trade? I'm curious, it's lifting this currency, or eventually is it going to become more, and will it become a draw on Japan's economy as their currency continues to strengthen?
That's an interesting question, Ben, and if you listen to Haruhiko Kuroda, who's the president of the Bank of Japan, he doesn't seem to think so, and I think you've got all tailwinds with the Japanese yen right now, and I don't believe that trade is too crowded yet. Right now you've got geopolitics, flight to quality for the yen. We see the talks between China and North Korea. Yesterday we see the yen dip a little bit along with the dollar, obviously opposite that dollar strength. So you've got a flight to quality tailwind as the globe is really sort of the volatility that we've gotten in the equity markets is probably not matched by the increased volatility we've got in geopolitics. And then you add to that the sort of Japanese economic story where they're finally seeing job growth, they're finally seeing consumer spending. At the same time, they're seeing the savings rate stay flat, which is good, because if the saving rate dipped, you could take that as a negative, and that's not happening. They're just seeing increased incomes. And then again, Kuroda, who was asked if a spike in rates would degrade the yen because the Bank of Japan would start to incur losses, and he flat out said no, although he didn't say how he was going to manage that problem. So the yen has all tailwinds right now, and when you get a dip in the yen, I'm a pretty big fan of buying it.
All right, we're going to watch that, and also we'll watch some of their creativity there as they try and manage the price of the currency. Bob Iaccino, thanks for coming on this morning. Always a pleasure to have you with us. Again, traders, that's Bob Iaccino joining us from Path Trading Partners.